all these bubbles have been created in all these other sectors. And here we are in the junior sector, which is the only deep value play left, while you have gold on the verge of making an all-time high, and it's already at all-time highs in every other major currency. And you've got a perfect storm climate for the gold and silver price right now.
Inside the markets, StockPulse.com, David Erfle, professional investor, JuniorMinerJunky.com. Always a pleasure to have you on and get your take on the markets. It's been a while here. I think last time we talked, we were starting to get really into the COVID thing. It was don't be a hero. I want to get into the equities. That's your expertise. But before that, let's set up the conditions here, the playing field. Let's go to the general markets. The Dow's made a pretty damn good recovery. The NASDAQ is new highs. The money's getting back in the mainstream market. So gold's hauling too. So let's kind of talk about how you see the overall economy.
Sure. Thanks again for having me on, Rob. I appreciate it. Yeah, it's, all that money that's being created is going into stocks of all kinds. It's and now the as far as the resource sector is concerned, it's beginning to sense the inflationary repercussions of what's happening. I mean, gold is rocketing towards all-time highs now as we speak, and it's being led by silver, which is always bullish for the sector. And it's on the throes of the U.S. about to announce a second round of stimulus, another stimulus check in the mail to the regular people, and also by the European Union just squabbling over their $750 billion package that they're going to announce here pretty soon. So not only gold and silver are sensing this, but equities are sensing this too, because why should we have our cash, as we were talking off mic, in dollars, as Ray Dalio would say? Let's just put it to work in the economy that's still driving the world, which is the U.S. economy, which is 25% of the global economy. The EU is much more of a basket case than the U.S. economy has been because of this virus. Because of the reaction to this virus, I should say. So, there's no sense in really having much cash in your account right now. It's just make sure you put it in the right places.
Yeah, let's talk about the right places. Obviously, we've ended up in this commodities sector through various research and understand probably what real money is, and all roads are going to end up here. Central banks continue to buy gold. Again, there's just not enough of it. It's precious, and as you said, silver is really starting to get going here. So let's talk about how the conditions are setting up here for the equities markets. And this got to believe this is now before it was don't be a hero. Well, I think now there's some heroes to be made, and there's some charts that look pretty good here that are looking more like check marks versus V's. So talk about how you kind of see the environment for the commodity investor.
Oh yeah, I've been talking about the huge base that the GDXJ has created over the past 7 years. We had the gold price break out of its 6.5-year base last summer, and the gold stocks pretty much lagged that move. And the GDX did not break out of its base until April of this year. And now the GDXJ has joined it recently. And once the GDXJ broke out of its 7-year base, that really got the juices flowing in the higher risk juniors. Even though you and I know that the GDXJ isn't really made up of juniors anymore, it's mostly mid-tiers smattered with some seniors. But as far as the general marketplace is concerned, the juniors are judged by the performance of the GDXJ. So once it broke out, you've had so many juniors now take off and gone up 2, 3, 4 times since this took place. So it's really getting overheated. But as far as the long term, short term, it's getting overheated. But as far as the long term, the technically measured target of the GDXJ, once it's broken out of this, now that it's broken out of this base above 49, is 90. So I wouldn't be surprised to see that target hit by spring of next year. Because if you take a look at the gold stocks in relation to the gold price over the past 30 some years, it's the juniors have been, well, the gold stocks have been in a bear market, and especially the juniors, especially since 2016, when we had that pop of about 6 months, where by January of 2016, the GDX had lost 85% of its value in 4 years. So we had a huge pop, which was basically began by short covering. And once the short covering started, then we had a lot of momentum players and people who had been waiting for this sector to take off come in and run it up to an overvaluation of 160% in 6 months. So that move took about 4 months to consolidate. And once we had the COVID response to everybody going into cash, which really decimated the sector, that was pretty much a double bottom on the XAU to gold ratio. That's how you measure how the gold stocks have performed versus the gold price. And if you take it back to 1996, if you remember what happened in 1996, Rob, was the Bre-X scandal, when the geologist of Bre-X was thrown or pushed out of a helicopter in Borneo, and he pretty much took gold stocks down with him. So from 1996 to 2016, gold stocks in relation to the gold price were in a bear market, despite the gold price going from 250 in 2000 to 1900 in 2011. So think about that. I mean, despite the gold price going up that much, the gold stocks in relation to the price of gold were still in a bear market until 2016.
Wow.
That's incredible.
Yeah, absolutely. So where are we today then? Who's in this market? It's the news used to not go very far. Now it seems like the news is getting some more steam. There's definitely more players in here. I always, as StockPulse being a U.S. company, my goal here is to really bring in the U.S. side. I still don't feel there's a lot of exposure here over here. What's going to get these guys in here? We've talked about it before. Is there a certain magic number of gold? You've always said the GD, just like you alluded to, the strength there starting to lead it. So I'm starting to see the lower level stocks now starting to participate. So who's at the party?
It's happening now. I mean, the millennials are participating now via their Robinhood accounts. They're all opening up these Robinhood accounts, and they're starting to discover this sector, which has been in the doghouse, like I said, for a decade. And in relation to the gold price, it's been in the doghouse for 3 decades. So, everything else has gone up. All these bubbles have been created in all these other sectors. And here we are in the junior sector, which is the only deep value play left, while you have gold on the verge of making an all-time high, and it's already at all-time highs in every other major currency. And you've got a perfect storm climate for the gold and silver price right now. I mean, I've never seen it more bullish than it is right now for the gold price, and especially for junior gold stocks, which have been ignored for years.
Let's take a quick pause for a profile spotlight. Today's spotlighted company, NV Gold Corp. NV Gold Corp trades as NVX in the Toronto Venture Exchange and NVGLF in the OTC in the States. It's a gold exploration company focused on uncovering the next multi-million gold deposit in North America, with an aggressive exploration season ahead in 2020, tight share structure, strong management, ownership, key strategic investors including Eric Sprott, a globally recognized technical team, technical coverage from the industry of gold experts, and cash in its treasury. Visit nvgoldcorp.com to learn more about this exciting story. Yeah, I concur with your analysis. And it seems like for years, if you've been in this sector long enough, Peter Speen has said at one time, the majority of this time spent here is miserable. And I would completely agree. So when you get times like this, but do we get excited here? Do we? I mean, the conditions have been right before? We've always known the weakness of the dollar. They figure out a way out of this. This time, I agree with you. I say no, we don't get out of this. So we should be setting up for a long-term bull market. Agree?
Absolutely. Yes. Like I said, that measured target, the measured target of the GDX breakout is 50. And this morning, I think we hit 41. And the measured target of the GDXJ, though, is 90. And it's at about 58, 59 right now. There's some resistance at 62, and it's become short-term overbought. The RSI is above 70, and it's getting a little overheated here. So I expect to see a little bit of a pullback here. But I expect pullbacks to be bought in the quality juniors, because many of them, even though they've gone up so much already, they're still trading as if gold's less than $1,500 an ounce. So they've got a lot of catching up to do, and especially silver stocks. Silver is a sector one should really pay attention to, because there's really not a lot of silver juniors for you to get into. Sure, there are plenty of silver juniors per se, but there's not a lot of quality silver juniors. A lot of these companies are drill plays. They're pumped by newsletters before they're even drilled. They go up 10, 15 times in an environment like this. You got to be careful with a lot of these things. So it's best to concentrate on something that's got a solid management team. They got access to capital. They're in a good jurisdiction. They've already got a resource. Because, a lot of these drill plays, there's no resource. You're just gambling that they hit something. And right now the market is very hot. So even if a company hits something that's so-so, the stock's been rising. So you just got to be careful with moves like that. But it's a buy and hold market now. And we're in the sweet spot as far as the GDXJ is concerned, in that measured move to 90. So you want to buy and you want to hold, and you want to wait till that target is hit before you start taking some profits, and try not to trade in and out. I know it's very tempting to get into something and say to yourself, wow, this really hasn't moved much, yet look at this stock over here. It's really popped. I better get into that. Then as soon as you do that, the stock you sold starts to take off. So this is a very it's very volatile and high risk sector. So you got to do your research, get into the right companies, trust your research, get into the stock and hold it.
Yeah, and I guess without giving away any of your tricks, you just gave away a lot of good advice there to investors. So I hope they appreciate that. When you get into a market like this, where it seems like the wind is definitely behind us, do you loosen up your fundamentals a little bit to do your routine? I mean, do you, some of those companies that maybe were on the fringe with too many shares out, a few things, is now maybe take a little of the risk off that and maybe start looking at some of those? Or do you stick to your guns and, again, just do what you just reiterated?
Well, I was fortunate enough to get myself and my subscribers into all my positions before the breakout took place. So
you never have to buy dinner again? Is that what you're saying?
My biggest worry now is, when am I going to start taking some profits? You don't want to do it too soon, but you don't want to hold out too long either. But it all depends, for your listeners, it all depends on your time horizon. Know what your time horizon is when you buy a stock. If it's a month, or, if it's a month or a few weeks, or if it's short term, then absolutely take some profits here, because, you've got some gains that have gone up, up 100, 200%. That's happened in the past 2 months. Absolutely take some profits. That's what I advise people that have short-term horizon. But if you've got a longer-term horizon, like 2 to 3 years out, which I think is going to be the minimal amount that this bull market lasts, then you want to just scale out of your positions slowly. Take some profits on the way up, and by all means, hold your core positions. I have my own rules of thumb. One of my rules is if a stock gets to be 10% of my portfolio, I'll take some off the table. If it's a drill play that I was fortunate enough to get into early and they hit something and the stock doubles or triples, I'll definitely take some off the table. So know what your end result, what you want your end result to be when you buy the stock. Meaning, if you bought an explorer developer and you're waiting for a takeout, and the company's doing all the right things and de-risking that project towards the possibility of a takeout, then you want to wait a while before you want to take some profits.
Sure. David, before I let you go here, appreciate certainly all the insight here. How do people follow you? And I know you're on Kitco a little bit, and you've got Junior Miner Junky, but tell everyone how they can follow you.
Sure. Yeah, my weekly column comes out on Kitco every Friday, and my website is juniorminerjunky.com. That's junkie with a Y. And my subscriber, my newsletter, my subscriber-based newsletter, is capped at 500 subscribers. So I have about 400 now. So there's plenty of room to get in. I upped the cap because so much liquidity came into the sector. I had a cap on it before during the bear market because during the bear market there wasn't a lot of liquidity in a lot of these companies. But now there's plenty. So you can find me there.
Well, I don't want to jinx anything here, but I certainly like the conditions. So David Erfle, professional investor, Junior Miner Junky, appreciate you stopping by, and I look forward to checking back in later here when we get down the road a little further.
Anytime, Rob. Always great talking to you.